Welcome to the Advanced Course Remastered, Lesson 3, Uptrends and Downtrends. All right, in the beginner's course, we learned about trends. But that's just it. They were just trends. They weren't up and down trends. They were simply a trend that we mark on our chart for support and resistance and create a one-touch buy as a support or resistance moment that we can take a trade on. Now we're going to be looking at up and down trends, that magical 2 and 4-letter word, up for uptrends and down for downtrends. This is going to be the moment that a chart has a trend on it and it continuously moves in that same direction and just refuses to break. It either continuously moves up across the trend or it continuously moves down across that same trend. So what happens to create these trends and what happens when they break? Well, in this lesson, we're talking about all things up and down trends. Okay, so we're going to start with an example for uptrends. Now, to be fair, this could easily just be downtrends, as everything I'm saying would just be in reverse for downtrends, as it's the exact same thing on both sides. But for now, we're just going to talk about the uptrend to make it simple. So in the beginner's course, we marked out our first trend and we saw the first touch rejection of that trend or the first touch support of that trend to get a great buy spot. Now, this is just simply a trend that is on your chart. When it breaks, it moves a move up or down. So you have a small trend. It could be there for 1 hour. It could be there for 12 hours. Relatively small time frame in the larger scope of things. It's not a trend that sits on your chart for a month at a time or even longer or maybe shorter. So what happens with these small time frame trends is they're kind of just treated like levels. A trend breaks, it's a small time frame trend, and you just simply go up to your next target. You just go into the next phase of your trade. No big deal, just like a level break, you go to your next target on the chart. But an uptrend, by adding those two words, we're changing the core meaning of what a trend is. So you have two different things here. You have a small time frame trend and you have an up or a downtrend. Again, we're focusing on uptrend right now. So you have trend and you have uptrend. An uptrend is a core mechanic on your charts. This will support a move going in that same direction as long as it's not broken. If you think back to the last lesson where we were talking about peaks and valleys, we had an uptrend that got broken and it created a large reaction down. There was a peak in the move that got broken by trend and this simply went down to the next valley. This happened because you lost a core part of your charts, which was the uptrend that was holding up the entirety of the move. So trends and uptrends have a fundamental difference as to where trends are simple moves that just break and levels that go to next targets or the next small phase of a chart. As to where an up or a downtrend breaks, it's a core mechanic of your chart that's breaking and you are going after a deeper level. When you have an uptrend or a downtrend break, this has a massive reaction as it's losing one of the core pieces of its chart. Now, when it breaks and you do have this big reaction, this is typically where you're going to see a valley or a peak broken. And you're going to start to see reversal of your charts. The larger time frame trend you break, the bigger move down you're going to have. So when you're creating these peaks and valleys and trying to create the reversals of moves, typically what happens is a target is hit, this target rejects, it breaks trend, it then breaks the valley or peak that was holding it up through that up or down trend and creates the reversal of a move going to the next appropriate valley on your charts or peak. I want you to think of everything we've learned so far. Trends, levels, peaks and valleys, highs and lows of moves, time frames within time frames, pulling this all apart fractally to see where we can find those unique moments. Now we talk about uptrends and downtrends with that. And let's start to create a scenario. Let's start to think of, okay, if we have levels on our charts and we have trends, and these are kind of the minor moments where you have simple levels and simple trends that break to show you the next piece of the moves. And now we've added some of these major moments such as peaks and valleys and uptrends and downtrends. We can start to see where the reversal of moves happen, and we can really start to get a grasp on how our charts react when specific things break. I think the key piece of information in this lesson, not only is it up and down trends, but it's the distinction between minor and major events. In the beginner's course, we simply marked levels and trends to get your minor moments, the smaller reaction points that happen on your chart. And in the advanced course, we're now working with major events that happen, peaks and valleys, ups and down trends. You can start to see where your minor information gives you kind of the more immediate buying spots and selling spots, and your major information gives you the larger reaction points. So as you move in and out of your information fractally, we can now create kind of a larger schema to see exactly what's happening. Reversal in the markets, trends that are going to break to maybe target uptrends or downtrends, valleys and peaks that will support moves, seeing your next targets. We're starting to add all of this information together to now get a clear picture of what's happening, not only short term in the lower moments, but longer term in the more advanced moments as well. So one thing I want to point out to everybody and reaffirm from what we said in the beginner's course, We haven't used volume, momentum, indicators, any of these things that we've discussed that are not used in the markets. Well, we haven't used any of them so far, and we're kind of able to describe everything that's happening on these charts. Now, there's more finite moments and acute parts of our chart, but again, we're only on the Advanced Course Remastered out of dozens of courses that I have. You will continue to learn more and more and more through those courses, but just take a moment to realize how powerful our charts already are without doing things like looking at order books, volume, momentum, indicators, moving averages, MACD, RSI, Elliott wave, Fibonacci. Any of these things that we have just mentioned, imagine how far we got without them because we're simply using data points, logic, and science to make sense of our charts. Pretty cool, isn't it? So this is the way day trading works at the highest level. Data points that communicate a real science that works 24/7 and lives and breathes and evolves in these markets. In the next few lessons, we're going to be talking about entries and exits to complete the Advanced Course Remastered before I put you on track to go even deeper into technical analysis. I'll see you there.